G'day. Just a quick update, 27th of January, end of day. Just looking this at the futures at the moment. On Bitcoin, we're definitely coming back into a more liquid period, but I don't know whether that's where really we've dropped into a liquid period, so we'll get some reaction, or we're actually going into a more liquid period, as in a startup like this. You know, we saw this start up and find some liquidity. Maybe it's building. Anyway, we'll see. Something will drop out this week, so that's where Bitcoin is. A bit closer on Bitcoin. Just having a look. We've got a little predictive liquidity indicator that we've added in it's pretty simple. Harry will probably do so this shows you the actual liquidity at the moment, and it's just the liquidity with an average on a 15-day basis. And so then Harry has showed you, depending on what the last 15 days have been like with their liquidity during the different sessions. Let's just turn this on. It's on New York. We can see where the liquidity has been on average during those sessions, and so that then changes over a period of time. And what he's done is just set it up as a predictor of where we expect the liquidity to be in comparison to the recent lines, and that's a good way to see what's coming up because of the changes that we see on the day. Then he's dropped in a divergence fill, so you can look at it. But most importantly, we can see the difference line. And so this difference line is showing us that, yes, we know it's going to be it's going to be liquid during the nighttime periods when the market is shut in the United States and Americans aren't trading, and it's going to, on average, it's going to be illiquid when there's lots of when America's open and late Europe is open and trading. And so we see these peaks of liquidity at night. But it's interesting to see how that has changed. So here we saw it dropped down into, this was it rising, this was the liquidity rising, and then it's dropped down into liquidity. And because it's dropped into liquidity, we've seen this reaction. And this reaction is a bounce to the upside. And there's a bit of an overshoot in it here. How big that overshoot ends up being, I don't know. It was going pretty flat beforehand coming into FOMAC until NVIDIA some market makers needed to lay off some vol. So I think it's just going to end up running flat, and that's just, we get these periods where we think that lots has been happening, and it's been getting more liquid, but they just tend to, they just sit along and they go flat, and so you'll get a whole lot of reactions one way or the other. But at the end of the day, really, as the price hasn't changed since the 17th of Jan, it's just been going flat, and I would say that we'll probably get back up somewhere into that range, into that volume node, which I have turned off at the moment. And volume nodes are really good to see where the action is, and where market makers and dealers are keeping it because of the hedging of the positions that are being held at any level. Oh, it doesn't like what I've got there. And so look, that's that price line, and it's just sitting on it, and I would say that it'll come back up if it gets into this high volume node, and it'll sit around it. Let's see what happens as this liquidity expands. As we can see at the moment, it is quite illiquid over the evening, more so than normal, and that's because we've had this reactionary bounce. We've gone up over where I thought that we'd probably go, but the drop last night only went as far as I thought it would go. These were my targets last night. This was the 0.5 fib on the last few days. That was that's the 0.618, and it hit them. And I do have this lower target, and that's just, I don't know whether we count half hours in Bitcoin. There's a possibility, if we don't count half hours, that we've still got an 88 100,000 target down there. But if we do count half hours, it was very textbook. It is well back above those. If we just then go and have a look to see what the expectations, we can see the pre's here. We can see that there is a bounce in Wolf, and look, that's to be expected. Look how far into liquidity it dropped. It's going to have a reaction. It's going to bounce. I reckon this is a bit of a dead cat bounce. I would have thought it was higher than that. You can see on any given, here we can see during this session, we can see going into Friday, we can see it rising. The liquidity, we know it's going to drop because it's rising. It's come up from quite deep liquidity after this bounce, but there's no real dead cat bounce. It just hasn't happened. It's topped out. It's risen, and as it's rising, we just know it's going to drop. And bang, it's gone in much deeper this time, much deeper liquidity, and we get this reaction. And so, look, if you were trading, that'd have been a great trade setup. Just like this is a great trade setup. If you're using this indicator, you'll see that you're going to get a reaction. How big that reaction is today, I don't know. It looks pretty small at the moment. It's only looking up. It's a 5% reaction. Anyway, I suppose that's an earner, isn't it? If you bought that at the close on a 5% on a 0 DTE, it's an easy way to use the indicator to make some money. And you see these reactions going the other way too. You'll see, bang, it's gone. With this price has been down here in liquidity. In illiquidity. I hope I haven't just made the whole video back to front. I do apologise. It's only for us and Simply Options. So it's bounced up from this illiquidity into a liquid period, and then we know that we will get a reaction. We're going to get a reaction to that, which is it's going to drop back into liquidity because it's just the inverse of the other reaction. So up it keeps on going, and these bounces have got smaller and smaller, and slowly it's sort of topped out. And Wolf just really wasn't looking the same as Mara. So then just have a look at Mara. We'll just go and have a look at what Mara did. I expect a very small bounce because it's dropped into this liquidity. It was expecting to blast off. I positioned myself for this blast off, and I hedged myself, and so I got a really good convexity in it, and I was up substantially on the position, even though I was down on the calls. And so it's dropped into this deep liquidity here, illiquidity here, and we've had a reaction, but I don't know if we're going to get too much more of a reaction because it's already up above in a much more liquid position. That being said, it was illiquid at the start of this, so it was ready to blast off. We were all positioning ourselves for it. Legitimately, it was ready to blast off. So that's where we were with the liquidity. This might steadily rise if we see Bitcoin go back up towards that volume node. It might rise, but Mara's a hard beast. We've got interest rates that are high, and the IWM's going up. And look, the IWM really looked like it was going to fire, and that got all of us keen in Mara. Let's just have a look behind the scenes. So this is the long dated options, so plus 30 days. Puts over here, calls over here. We've seen it topped here on the 16th of January. The 16th of December, and you can just see that it's really migrated and it's become much more heavy, and just slowly backed off. I mean, we could see there was shorts in it too, but this isn't the short side. This is just the hedging side and the long-term positions. We've seen that sort of swing back around. Not particularly. It's not a heavier position. Here we had some 400,000s, and we were down in 0.1. So 10% the number or the weight of delta of calls. So it was very light. Down here today we're down to 0.4, so 40% calls in weight, which is heavy. That could turn around. It only doesn't need to turn around a great deal. We're sitting here at 0.5. It doesn't need to turn around a great deal, and that would open that up, and we would be into a stronger position. But that being said, it's got to bounce a little bit more to get us back into that 300s, back down into where we were as we were climbing out last week. Yeah, there was a bit of DPI and there's a bit of a buy signal. That's just a reactionary one. There was a little bit of buying. There's nothing. Yeah, no, it's all right here, but there might have been some call selling at the top there. There is some, but most of this sort of hedging. I just think this is positional hedging in the game. Here, this is the 30 NDM, and this is where the business is. This gives you a much clearer picture. And here is in close. We'll cut it even a bit finer, and we can see that there was quite strong positioning into last week, and this is what didn't roll. So it was quite a weak roll. Not that affected it. It was the roll would have been strong if we hadn't had this huge action. And you can see here there was literally no hedging going into this event. No one thought in the Mara crowd that this was coming. I must admit they didn't in the BTC crowd either. If we go and we look at the 7-day, the 7-day was heavier. We are going into an OPEX week, and we can see a couple of things in the 7-day. There was lots of closing in the shorter dated, but in the month it's still quite good. We've had a little bit of closing here, but those closes are right down low. Oh no, they're all right. No, they're all right. They're up over 0.75. So some weights closed there. I don't know whether it actually means anything. But if I look at the 30 days, this here is nothing particular, mate. I don't think it was a move on the Friday. We are just recalibrating, so we get us down to one single day jumps up until 15 days, just to try and iron out that. We're just still a little bit clunky in our data. But in this slightly longer period, we can see that there really wasn't much. There's this one bit of hedging here. It's tiny. It's 15. It didn't raise any alarm bells for me. But there is one slightly stronger one there today. Is it much stronger than what we've opened on the other side? No, pretty flat. That's what I think about Mara. I think that Mara is not going to get a great reaction unless we see a strong reaction in the IWM. And I think that we're not going to see anything really happening apart from mean reversions because of dumping in and out of liquidity. And those mean reversions are hedging mean reversions. I don't think that we're going to see anything till after the FOMAC, and maybe until some people have done some more figures on DeepSeek and whether the Chinese were bullshitting Trump, which means that if Trump gets his goat up about it, there'll be a shit fight over him using China as an inflationary hedge, which is the cards that he's put on the table over the last week. All right, there you go. I hope that wasn't too long and boring.